Hello everyone, my name is Lamarr Baxter. I'm the Business Development Manager for AccuPlan Retirement Services. Today we're going to be covering the topic of self-directed IRAs. We're going to be talking about in particular how to use the self-directed IRA for real estate investing. There's a multitude of uses for the self-directed IRA, but today we're going to kind of touch bases on how to use the self-directed IRA for real estate investing. We're going to talk about some of the other options you have in terms of using the self-directed IRA. We're going to talk about the rules in terms of what you can and cannot do, who you can and cannot do business with. Hopefully at the end of this presentation you will gain a basic knowledge of the power and the wide range of options you have using the self-directed IRA to grow your retirement account and to gain financial independence. Just to kind of give you a background on myself, I've been in the finance industry over 22 years, have a varied background ranging from mortgage, retirement services, consumer lending, as well as business lending. A lot of my experiences in the past puts me in a position to be able to consult with my clients to kind of give them an idea how to use the self-directed plan. As I mentioned earlier, you have a wide range of options using the self-directed IRA. One of the options that a lot of my clients are beginning to take hold in terms of using a self-directed IRA is to start businesses. One of the options you may have, you may run into a situation to where you may be looking to start a business or to fund an existing business. There is options or ways that you can actually use the self-directed IRA to go ahead and get that project started for you. My objective today is to cover information relative to education on retirement planning, as well as using a self-directed IRA to grow your retirement account and build wealth. My presentation is not designed to give you any advice or steer you towards any particular investment. It's really to open your eyes to a lot of the investment options you may have been denied or not told about over the past X amount of years, in contrast with what you're being offered through your 401k or IRA through the stock market. So with that being said, our disclaimer basically states that we do not provide any investment advice, tax advice, or legal advice. The main objective is, once again, is education. If you need any assistance or advice in tax, legal, or any types of advice in that area, please consult with your tax professional or legal professional in that area. Be happy to sit down with you or have a conference call with those professionals to kind of help you along in terms of using this vehicle the proper way. AccuPlan, just kind of give you a background on AccuPlan. We are a national company. We specialize in custodial service of 401k and IRA services. For those individuals who are looking to fund a retirement account for alternative investing, you can use the 401k or the IRA to basically fund those accounts. In addition to the individual, we also have plans designed for those small and medium-sized businesses who would like to also take advantage of offering self-directed as part of their benefits package. For information on that, feel free to give me a call. I'll provide my information at towards the end of the presentation. Just to share some statistics with you to kind of give you an idea why the self-directed IRA and why it's so important and why many people should be looking at this option as a way of growing their retirement account and taking control of their retirement funds. They say as of January 1st of 2011, 10,000 baby boomers per day will turn 65 for the next 19 years. Of that segment of the population, up to between 75 to 90% of that population do not have the resources left to retire at the age of 65 and beyond. So with those alarming statistics, hopefully this is something that should be a motivator to let you know that you need to take a proactive approach, think outside of the box, and explore every option that's available to you to grow your retirement account. Most will be forced to continue to work after the age of 65. Retirees are going to be facing skyrocketing healthcare costs, diminished Social Security, and other benefits that's been around for previous generations. A lot of those benefits may or may not be around, so it's really important to take advantage of the self-directed IRA and the many options that you have using the self-directed IRA to grow your retirement account. One of the other factors is going to be inflation and cost of living. They say most retirement accounts, whether you had basically taken a hit in 2008 or not, will not keep pace with inflation. So that's another factor to factor in terms of why to use a self-directed IRA and choose some other investment options going to hedge against inflation. There's over $4.7 trillion in retirement funds combined between IRAs and 401ks, and they say only 1% of those funds are actually being self-directed. So my objective is to educate you, to hopefully turn those numbers around, to put you in a position to grow your retirement account and put you in a secure position at retirement. They say up to 90% of the population do not know that a self-directed IRA exists. As part of the ERISA Act that was passed in 1974, Congress passed the act in 1974 allowing you to self-direct your retirement and 401k. So it's not a new concept. Most banks and other financial institutions have steered you towards traditional investments in the stock market, kind of giving you the idea that you're diversified because you may have access to up to 10 options. True diversification is basically options having access to both traditional and non-traditional investments, which includes real estate, private placements, investing in a business, become a private lender, a whole host of options that's available to you. You may be led to believe by some planners and advisors that if you move your monies over to a self-directed plan that you now no longer have options to traditional investments. With the truly self-directed IRA, you truly have access to both sides of the fence, the best of both worlds, both traditional and non-traditional investments. So we're going to cover some of the options in terms of what you have available to you, and feel free to give me a call once you, at the end of the presentations if you have any questions. Just part of when we say 90% of the population is not aware, that also includes attorneys and accountants. Not to basically throw them under the bus, so to speak, but a lot of them are not specialists in this area, so they may not have information as to how this plan works. Usually your plan agreement, meaning the plan agreement for your retirement account, will dictate what you can and cannot invest in. So it's important to consult with your tax professional, your legal professional, let them know what your short-term and long-term objectives are relative to retirement, and if necessary, we can have that conference call. My objective is to educate both the individual account holder as well as any professionals who are looking to get educated in this area and pass this information along to their clients. A financial planner probably wasn't trained, once again, is one of those situations to where they are specializing in certain areas of investments, so they're not going to be well-versed in terms of what the rules are and what you can and cannot do if it's not something that's included in their plan agreement. So once again, give me a call. I'll be happy to discuss with you in terms of what options you have available to you. And just keep in mind, one of the problems what a lot of my clients run into is they may call their planner advisor and ask about a self-directed IRA. Self-directed IRA is kind of a generic term. A truly self-directed IRA will allow you to invest in both traditional and non-traditional investments. So a true test is to ask your planner advisor, can you invest directly in real estate? Not a REIT, but directly into real estate. If the answer is no, then you know at that point you do not have a truly self-directed IRA with that custodian. That's where you may look to transfer a portion of all of your funds over to a truly self-directed IRA to fully enjoy true diversification of the many asset classes that's available to you through a self-directed IRA. True diversification basically falls in the category of any and everything that's available to you. With a truly self-directed IRA, the sky is the limit. The only limitations you have with a self-directed IRA in terms of asset classes, or should I say restricted investment classes, would be life insurance and collectibles. So just kind of think outside of the box when we say the only restrictions you have is life insurance and collectibles. Hopefully your mind is probably racing at this point right now trying to figure out, wow, why wasn't I ever told about this? I have a multitude of investment options that's available to me using the self-directed IRA. Let me go ahead and give these guys a call and see how I get my plan set up and start exploring some of the other investment options. The majority of the funds are invested in mutual funds and brokerage firms, which are usually held in the stock market or some type of traditional investment class. There's nothing wrong with the traditional investment class, stocks, bonds, and whatnot, but once again, it's really important to really spread your risk out towards other investments and some other investments that may offer you what I would consider a collateralized form of investment, such as real estate, something that's tangible, to where in the event there's not so much of so much volatility in terms of your portfolio. If certain things happen on the stock market, you do have something, your risk is spread out to other asset classes that's not necessarily tied to the stock market. The model of the self-directed IRA is to invest and know what you understand. So once again, it's for those who are looking to take a proactive approach in terms of growing their retirement account. Those who actually feel that they can do a better job than their planner advisor in terms of growing their retirement account in asset classes that's not normally offered through your traditional custodian, planner, or advisor. I would say four of the more common classes that most people are taking advantage of, and this is what's common in terms of what I see come across my desk, would be real estate, precious metals, private notes and loans, and private companies. Real estate would basically make up, I would say, a good 75% of the majority of the investments that are made using the self-directed IRA. That would basically go in directions such as purchasing property, whether it be single family, commercial, land. Clients are even looking into and have in the past invested in properties or real estate overseas. You do not have any restrictions as to which direction you go with this, especially when it comes to self-directed IRA. But there are rules that you're going to have to follow, especially if you're looking to invest in other asset classes, or should I say other properties in other countries, relative to their rules or their laws relative to how the property is held. If you want more information on that, feel free to give me a call on that. One of the other aspects when it comes to real estate would be private notes and loans. Think outside of the box. Become the bank. Some may not want to actually hold real estate whole or become a landlord. One of the options that's available, which I use my self-directed IRA for, is to make private notes and private loans. You can actually secure these types of loans by real estate, other personal property, by a UCC one. A lot of clients are actually using their private, or should I say their self-directed IRAs to lend to private businesses. And you can pretty much work out the terms in terms of whether you want to lend the money secured or unsecured. There's no restrictions on whether you can lend the money secured or unsecured. Precious metals is another option. It's kind of died down over the last couple of years. It's kind of hit a plateau in terms of the prices, but that is another option that a lot of our clients have taken advantage of in terms of investing in precious metals. Private companies. There's a lot of businesses out there, whether it be startup or existing businesses that are starving for cash. A lot of clients are looking to invest in existing business where maybe the business has been in existence for the last 15, 20 years. As we know, the banks are not lending, whether it be to purchase a house, refinance a house, or even to start a business or maintain a business. Some of the options, once again, we talk about the sky's the limit with the self-directed IRA. There's a multitude of options, and here, looking at this slide here, just kind of give you an idea, the sky's the limit. If you look at this slide, hopefully something jumps off this slide here that pretty much tells you, wow, there is a vast amount of options that's available to me using a self-directed IRA. I'm pretty sure if you were to share just a fraction of the items that's listed on this slide in terms of investment options with your planner advisor, 9 times out of 10, they're going to tell you those investment options are not allowed in your current structure with your retirement plan. So once again, invest in what you know and understand. Think outside the box. Now, I've told you all the good things about the self-directed IRA. There are rules, and some may try to deter you from using a self-directed IRA because of the rules. The rules are very simple and straightforward. If you follow these rules, you shouldn't have any problems. IRS Code 4975, which is part of the Internal Revenue Code, 4975 prohibits you from doing certain things with the self-directed IRA, making certain investments. As we mentioned, we talked about certain investment classes such as life insurance and collectibles are considered what they call prohibited transactions. There's also a section in IRS Code 4975 that covers disqualified persons. And what that is who you can and cannot do business with. To kind of give you a visual, the disqualified parties would be certain family members. So look at it on a kind of a vertical relationship versus a horizontal relationship line. Anyone who's on that vertical line of relationship line is usually prohibited parties or disqualified persons. Those who are on the horizontal lines are permissible parties to do business with. So just kind of give you an idea in terms of the list of those who are not considered those who are considered disqualified parties. On the vertical line would be yourself, your spouse, parent, grandparent, children, or grandchildren. Any of those who are on the vertical, should I say the horizontal line of relationships, such as siblings, brothers and sisters, cousins, aunts, uncles, those are permissible parties to do business with. So hopefully that kind of give you a quick reference in terms of who you can and cannot do business with as it relates to disqualified persons. Another set of disqualified persons or parties would be any person who is a fiduciary within that transaction. So that would be an attorney or CPA or a real estate professional. If they're taking part in assisting or servicing you as part of your transaction with the self-directed IRA, they are prohibited from doing business with you or taking part within that transaction relative to partnership or investing. Anyone who is also owning a business, you're prohibited from basically buying from yourself or buying from any entity where you have over a 50% ownership stake or decision-making powers within that business. So what does that mean? If you have an existing business and you're looking to invest in that business and you own more than 50% stake and you have a majority controlling stake within that business, that would be considered a prohibited transaction. If you're under that 50% threshold, depending on certain parameters, you are allowed to basically conduct business, such as loaning business money to that business or loaning money investing in that business, depending on the structure. So for more information, once again, if you have any questions on that area, give me a call. So basically what we're talking when we say the Internal Revenue Code 4975, when we talk about disqualified persons and prohibited transaction, you really want to follow the rules because the IRS is closely looking at these types of accounts in different structures. So once again, the only thing you would have to worry about if you're not following the rules, you follow those simple rules in terms of who to do business with and what type of transactions are allowed, you should be fine. The next question usually comes up, okay, I want to get started. How do I get money into the account? We're going to cover the 4 major methods of getting the funds into your account. How do you actually fund your account, so to speak, putting gas in the tank? The more common transaction would be transferring monies from one IRA to another IRA, which would be your self-directed plan. That usually takes up to 7 to 10 business days to get those funds transferred over. It involves you completing one of our internal forms, which gives us written authorization to initiate the transfer process on the behalf of your IRA. Once again, it takes 7 to 10 business days. There isn't a taxable event for this type of moving of the funds. The next method would be rolling over funds. If you're with the previous you have a 401k with a previous employer, you have the ability to roll over those funds from that 401k or other employer-sponsored plan over to your new self-directed IRA. You have the option to move the funds over via a direct rollover or an indirect rollover. You want to usually check with your current custodian to find out which method they prefer or use when it comes to rolling over the funds. That can be a taxable event. On any rollover, direct or indirect rollover, you have up to 60 days to move those funds into a new retirement account to avoid taxation and an early 10% distribution penalty. So it's really important to pay attention to that timeline once you get that process started. The other method of getting funds over to your new account would be a contribution. Your limits are usually going to be based on what type of plan that you choose. So depending on whether you select a traditional IRA, Roth IRA, a SEP IRA, simple IRA, all the plans that you currently have available to you at your existing custodian are also available with the self-directed IRA. What most of our clients will do to kind of keep things simple is to stick with the existing plan type that they're transferring over, so they are pretty much aware of the rules as it relates to contributions and other rules relative to that plan type. The only time most people will change plan types if they're going from a situation from where they're going from being employed to self-employed or from W-2 to 1099. If that's the case, we can have a conversation on which plans may be best for you, both short-term and long-term. And of course, we're going to definitely consult with your CPA or your tax professional to give you a better idea of what you should be doing, both short-term and long-term. Lastly, the conversion. A conversion is where you're moving monies from a tax-deferred account over to a tax-free account, usually moving money from a 401k or an IRA over to a Roth IRA. Benefits of moving those funds over is one of the downsides is going to be tax. There isn't a early 10% distribution penalty that is waived on a conversion. You will be taxed on the portion that you will be moving over in that conversion. Most are led to believe that in order to convert, you have to move the full amount. That is a myth. You can actually do a partial conversion. So at that point, you want to sit down with your tax professional, determine what your tax liability is for that year, and determine whether you want to do a partial or full conversion. But that is definitely an option that's available to you. One of the benefits of moving the funds over to a Roth IRA after you've had the account for 5 years and you're 59 and a half, there is no taxable event and you pay no taxes on the gains that you derived based on the growth of the funds within that account. So once again, it's something that is very beneficial for those who are worried about where the tax rates are going to be in the coming years. Here are the different types of plans that we have available. As I mentioned earlier, we have pretty much every plan type is available to you relative to what the other custodians, should I say the traditional custodians, are offering you. So once again, we have the traditional IRA, which a contribution limit up to $5,000. The Roth IRA, same contribution limit. Both of those contribution limits can also be offset if you're over the age of 50 and a half. You can make an additional $1,000 contribution, totaling that amount to $6,000 per year. The SEP IRA allows you to contribute up to $50,000 per year, or 25% of your gross annual income, whichever is the least, but to never exceed $5,000 or $50,000. There is also a $4,000 catch-up if you're over the age of 50 and a half, as it relates to the SEP IRA. A simple IRA is also for small and medium-sized businesses that are looking to kind of take advantage of some of the benefits of a 401k, but keeps it a lot simpler and a lot more cost-effective. The contribution limit on that is $11,500. We also have a real popular plan, which is kind of a hybrid between an IRA and a 401k, which we call our solo K, or we call it a 1K, is also known as the solo K. This allows you to contribute as both an employer as well as an employee up to $50,000. One of the nice things about the solo K or the 1K is that you're able to borrow from that plan as like with any 401k, because it does have the 401k component. So for more information on that, feel free to give me a call. One of the more, as I mentioned earlier, one of the more popular options with uses of the self-directed IRA is to purchase of real estate, whether it be buy and hold and buy and flip. Just kind of give you an idea in terms of how the process works when it comes to acquiring real estate within a self-directed IRA. In this case study, I'm going to show you how one would use a self-directed IRA to acquire real estate on a buy and hold basis. In this case here, the customer is actually going to open up a self-directed SEP IRA. That's going to just be the case study that we're going to use, or should I say the account type that we're going to use in this particular case scenario. All plan types are available to use this scenario, whether it be buy and hold or buy and flip. So in this case here, we're going to use, John's going to purchase a rental condo for $100,000 using his self-directed SEP IRA. He's going to transfer $125,000 from his current brokerage account, whether it be a Charles Schwab, Franklin Templeton, over to his new self-directed AccuPlan self-directed IRA. He's going to go through the normal channels. One of the processes in terms of getting this taken care of is to complete the purchase contract. Keep in mind, once you purchase a property within a self-directed IRA, there's a certain process that must take place. Remember, this is an arm's length transaction, so your custodian, AccuPlan in this case, is going to be serving as the third-party administrator, which means we're going to be signing all documents on the behalf of your IRA to make sure that it complies with all IRS rules and it remains an arm's length transaction. So with that being said, John's going to initiate a purchase contract under the name of the SEP IRA. When we say under the name of the SEP IRA, you have what's called a legal account number investing, and the account number investing is going to read as follows. It's going to be American Estate and Trust, FBO, which stands for the benefit of John Wood's SEP IRA, and then the IRA number. That is the vesting that's going to be listed on all documents, including the purchase contract, as well as how it's going to reflect at the close of escrow, and any title reports that are pulled is going to show the IRA as the vested owner of the property. John is going to complete what's called an investment direction letter in conjunction with completing the purchase contract. Keep in mind, he's not going to sign the purchase contract. He's going to initial and acknowledge all the terms within that purchase contract to make sure everything is correct based on what he or she wants to purchase as it relates to the self-directed IRA. Once that process has taken place, he's going to fax or email the investment direction letter along with the purchase contract over to me or to AccuPlan to review and to sign and return. Once that's done, your purchasing agent is going to forward that over to the selling agent, get their signature, and at that point it's pretty much a normal transaction. AccuPlan then, per the instructions usually indicated in the investment direction letter, is going to, you as the account holder is going to give us directions to send over escrow deposit instructions over to the title company. So in this case here, it's going to be a $5,000 escrow deposit. We're going to usually wire or send those funds over via check, whichever you choose based on the box you check within the investment direction form. John is going to read and approve all the closing documents. Once again, he's going to read and approve. He's not going to sign anything. Once again, the objective is to make sure that he acknowledges the terms that he's going to agree to relative to the acquisition of the property for his IRA. AccuPlan then wires the funds over to the from the SEP IRA account over to the title company to close. The warranty deed is then recorded and sent back to AccuPlan for safekeeping. Once again, if you were to pull the title report, it's going to reflect that the buyer or the purchase of the property is going to be American Estate and Trust, FBO, John Wood, SEP IRA number, and then its account number. So once again, the IRA owns that property. Now, in order to reverse that process, say in X amount of years, John wants to sell the property. John has now located a property. He has a property manager to take care of everything in the process prior to him selling the property. So now he's ready to move forward selling the property. His next step is to contact a selling agent to assist him in the process in reverse of acquiring the property. Once this takes place, it's going to be exact reverse of what happened as it relates to acquiring the property. As he's renting the property, something to keep in mind, this is a more common question that comes up, what happens to, in this case here, the rental income? All rental income is sent back to the IRA, is accumulated or deposited into the self-directed IRA account, tax deferred. In this case, it's going to be tax deferred. If it was a Roth IRA, all accumulation of rental income would be tax free after they've met the milestone of 5 years and 59 and a half. All rents and expenses are handled by the property manager. Property manager is optional. Once again, you as the disqualified person is prohibited from being a property manager or handling the property in that manner. So usually you're going to have to look at someone who's not a disqualified person. Keep in mind, anyone who's on that vertical line of relationship is considered disqualified and cannot serve as property manager. So at that point, you want to look at those who are on that horizontal line of the relationship if you're looking to have someone to service the property in the capacity of a property manager. In this case here, the condo has a positive cash flow of $450. It's going to be tax deferred because once again, it's a self-directed SEP IRA. John is going to track his account online. We do have access to our accounts where anything that goes on with your account, you can actually track everything online 24/7. So once again, as we mentioned, this is a buy and hold situation. John decides he wants to sell the property. We're going to run through the steps in terms of what John is going to do to sell this property. First, he's going to complete a sales contract, prepare for $150,000. That is the amount that he decides he's going to sell that property for. He's going to coordinate with AccuPlan to take care of all the closing documents. On the day of closing, John's going to read and approve, pretty much as he did in the beginning when he acquired the property. He's going to read and approve all closing documents to make sure everything's in order. At that point, everything's forwarded over the title and escrow. Our real estate department will coordinate with the title company, make sure everything closes properly as well as timely. Proceeds after the closing costs are wired back into the SEP IRA account. Once again, in this case, because it's a SEP IRA, tax deferred. So basically, any profits that you would have realized, including the principal, is going to be wired back into the account. So just kind of give you an idea what John made on his property. His initial investment was $100,000. Over a 24-month period, he actually accrued $10,800 in actual profit derived from rents. In addition to the rental income that he derived in terms of profits, he also sold it for a gain of an additional $50,000 because once again, he purchased the property for $100,000. So just kind of give you an idea, once this transaction closes, the total amount that would have been sent back to his retirement account, or should I say would have accumulated in his retirement account, would be $160,800. So in this case here, he has a gross gain of a 61% return on a $100,000 investment. Not bad. Many people are not getting those type of investments in the stock market. And keep in mind, this is a collateralized investment, something that has never gone to zero, despite what's happened over the last few years in terms of the real estate market. If you contrast that with traditional investments in the stock market, some stocks went to zero. Real estate never went to zero. So just kind of keep that in mind once again, and when it comes to secured and tangible investment options when you're using your self-directed IRA. Here's the process. It's a real simple process. Takes usually up to 2 weeks to establish, fund the account. The first step is to establish the account. One of the main objectives is to make sure if you're going to be acquiring any asset, it's very important, it's imperative that you establish the account. You cannot go into contract under your name and then transfer the property into the IRA. It's considered a prohibited transaction. So the first step is to establish the account. The account process is as follows. You're going to open your account. You can do it online, which usually we can establish the account within minutes from the time that you complete the application online, or we can send you over the PDF version of the application within 24 hours. We can have you an assigned account number investing that will allow you to go into contract. The next step would be to fund the IRA via transfer, rollover, or contribution. Keep in mind, if it's going to be a transfer, allow 7 to 10 business days from the time that your existing custodian receives those forms in order to fund the account. You have the option to have the funds wired or a check sent. Keep in mind, if a check is forwarded over, it's going to be a mandatory 5 business day hold on that check. So keep that in mind if there is a pending transaction or it's a time-sensitive transaction. So once again, within a 2 to 2.5 week span from opening the account to funding the account, you're actually ready to move forward to making your investment. And so once again, If you have any questions on this process, feel free to give me a call. I know it's a lot of information to digest. This presentation is not designed to educate you in one setting. It's more or less to give you a basic concept or basic education and knowledge on how the self-directed IRA works. Just in summary, so IRAs can hold all types of investment, both traditional and non-traditional investments, not just securities. Partnerships and split ownerships are allowed. We didn't cover that today, but that is an option that's available using the self-directed IRA. IRAs and individual plans grow tax-deferred or tax-free, depending on what type of plan you choose. All plans qualify for partial transfers and or for partial conversions. Consult with your tax professional when it comes to the conversions as it relates to transfers. It's going to be pretty much up to you in terms of how you want to diversify your total overall investment portfolio as to whether you want to move all or a portion of the funds over. Be sure to establish and fund your account prior to entering into contract. That is very important on any time-sensitive transaction, especially real estate transactions, because you do not want to wait till you get down to the final hour only to realize that you've committed a prohibited transaction because you entered into contract prior to establishing the account. The account number investing must be, for the IRA, must be the listed purchaser of the property in order for it to remain a compliant transaction. So that is pretty much my presentation today. Here's my contact information on this slide. You can email me or contact me via phone. I usually return calls within within 1 hour, definitely within 24 hours from the time, depending on what time you leave the message. And once again, I look forward to hearing from you, and hopefully this information has opened your mind to the true options available to you in terms of growing your retirement account. My name is Lamarr Baxter for AccuPlan Benefit Services. Thank you and have a great day.